Welcome to Gold Silver Pros.
Hey everybody, it's your host Rob Kientz with 𝑔oldsilverpros.com. This is your weekly market wrap up for Tuesday, February 27th, 2024. Last day of the month coming tomorrow. Well, actually, we have leap year this year, so last day of the month coming on Thursday. Correction. There's a lot going on. We're going to talk about gold flows, a little bit about silver flows around the world and how those are ramping up, and deliveries on all the exchanges are starting to get a little bit higher. And you can tell that people are really searching around for that liquid gold and silver. On the big industrial markets, we're going to talk about what's going on in the economy. And we're going to talk about some very interesting news, farmer protests across the pond and what that's doing, and what we may see coming to a city near you in the United States. But let's get started with the economic data. Existing home sales last week were reported up above expectations. There were 4 million existing home sales on expectations of 3.97 million. And this week, new home sales on Monday came in higher than expected. Expectation was, than last month. Last month it was 651,000, expected 680. We fell short of that, but we still increased from last month to 661,000 new home sales. So home sales look to be doing pretty good after we had a little bit of moderation in interest rates. However, those interest rates are starting to rise again, and I think that eventually will affect the mortgage market. What's going on also and making it difficult for even preventing even more new homes, existing homes from being sold, are the fact that according to the S&P Case-Shiller Home Price Index, real estate prices continue to rise faster than the government inflation rate. This month, a 6.1% increase over the 20-city metric for Case-Shiller in home prices. And that follows last time we had a positive 6% in the index for the last month. So home prices are rising faster than is the government stated inflation. I actually think this is quite a bit less than real inflation we see on the ground. But in any case, it's unsustainable. As long as home prices are continuing to rise like this, and we have bond rates amping back up, which we have had basically since the end of January, it seems to me that the housing market cannot sustain its current path for too much longer. I think we are in the bubble phase. I think there's a lot of euphoria in stocks and in the housing market. I think that's going to end pretty soon this year. Consumer confidence is down to 106.7. The index last week reached a high of 114.8 for the year. Consumers are starting to, as we get further into the year, a little bit less confident. As we get out of that holiday season, into the earnings reports for companies in the first quarter, we're finding out there's a lot of weakness out there. Consumers are, of course, tapped out and don't have enough money basically to pay bills. That explains why the fall in consumer confidence. We've got a raft of other data coming later this week, which we'll get to on next week's weekly market wrap. Looking overall at the markets, the Dow Jones is trading down about 145 points today. The S&P is up 0.66 points. NASDAQ's up 37 points, and Russell's up 22 points. Overall, the stock markets are doing very well, continue to reach new all-time highs. On the backs, I think, mostly of the money printing, not necessarily on fundamentals in the market. Looking over at bonds for a moment, we have rates rising. The 2-year and the 4-year are both above 4%. And they're still in yield curve inversion. So the 2-year is trading at 4.691% at the time of this reporting, which is higher than the 10-year at 4.287, signaling an oncoming recession. And with both of those rates trading well into the 4s, it will affect other markets like the housing market as those interest rates trickle down through the economy. Therefore, I think putting a stop to the housing euphoria we had the last couple of weeks. What we're seeing in the news is that the average mortgage that people are getting is more than 33% of their gross income. And so those are not sustainable. We saw that in 2006 and 2007 leading up to the Lehman crisis, people taking on loans they could not afford, and eventually that collapsing in a sort of euphoric end stage of the housing market. I think that's what we're squarely in right now as well. Moving over to the cryptocurrencies, overall Bitcoin's been doing very well, up 2,172 today on the back of additional ETF flows, which are being tracked by the finance sector. Bitcoin at time of this recording is at 56,697, having a very good day, and the rest of the crypto complex is good. Of course, Bitcoin is leading. That ETF money really is doing a lot for it. We're going to move over and talk about the gold and silver trade. And then we're going to get into the interesting stories about the farmer protests. So here's what we got going on with gold. As you can see, pretty decent amount of trade here. Trading's been elevated since about the middle of February. But the one thing I want you to pay attention to are the exchange for physicals. Those who have been watching my program know that the exchange for physicals are moving from this market over the pond to the OTC market in London and the UK. And why we do that is price arbitrage. Maybe the prices are more favorable over there, so you're just trading paper, or you're looking for the physical. But based upon the world gold flows that I'm seeing, I think people are looking for the physical. So if we look at Monday's data, we had 2,749 contracts on April move over to London. Those are 100 ounces each. But look at where it gets really interesting, 6,000 EFPs on Friday alone, and another 2,000 on Thursday. And look at Wednesday's data, 1,400 going back to Tuesday. We have 4,030. So there's an elevated amount of contracts flowing from the United States over to the UK looking at gold, more than likely looking for some access to physical delivery on an OTC market by trading that futures position. A lot of times you can trade that futures position and make a little money by entering the OTC market because prices will be different and you'll make money just on the difference in the paper. That's called price arbitrage. But also when you see this many EFPs moving over, and we've seen the liquidation from the COMEX of both gold and silver for over 3 straight years now, I think there's also a strong element of hunting for the physical. I've got more data on hunting for the physical. Wait until you look at the Chinese market. It's going absolutely bonker nuts right now on the physical side. We'll get to that in a moment. Overall, we look at the settlements tab. I'm over here. And you look at the April contract, which is the biggest one. You can tell because open interest yesterday was 321,000 contracts. So far, today's volume is 129,000 contracts. A lot of contracts being traded in April. Price is down $10 so far. An early morning data for, for Monday's data. For Friday's data, we were up 18 bucks in the gold market. Again, this is just based on contract paper trading. So the spot price is determined right here in the paper trading, not in physical. And I keep making that point because I get a lot of people that don't understand the pricing market for gold and silver. It does not have to do with what you buy at your local coin dealer or online or what you're ordering physically as a retail buyer. That has nothing to do with spot price. Spot is determined by big paper contract trades on potential for future prices 2 and 3 months out on this big market. That's how it's determined in conjunction with some data coming over from London on a similar over-the-counter market, not specifically related to physically settled retail or even industrial physical metal transactions. It doesn't have to do with that. And that's why I show this every single week, even though you guys have seen it 1,000 times. February's data again, on Friday, the 23rd February, data for April had us up $18.70. If we go back to Thursday, we were down $3. And if we go back to Wednesday, where we're down $5. So a bunch of range trading in gold so far over the last week, while a lot of physical is moved off the market. Now, some of that could be cover of keeping prices down for physical to move off the market. But this week, I actually think the market's just reacting to news and it doesn't see anything. It sees a strong stock market. It sees some increased home sales. It thinks everything's okay. That's the way the computers, the AI system, and the traders that are actually physically engaged in making trades also look at it on that market. Moving over to silver, we see a lot of extended volume since the middle of February. That usually means there's a downward interest as you have more short contracts, but we'll take a look at that. Overall, the big month right now is May. It's switching from March to May. March has more of the trades, but May's getting more of the interest as it added 11,000 contracts yesterday into that May contract. That's a futures contract. Overall trading 104,000 open interest contracts in May is really where we're getting our data here. Total volume as of Monday was 43,527 contracts. EFPs at 385 for Monday. If we go to Friday, EFPs at 990, which is pretty high for the silver market because remember, these are 5,000 ounce contracts, whereas gold's 100 ounce. So you don't need as many EFPs to get as much metal in the silver market as you do gold. A lot here on last Thursday's data, 1,440 contracts posted to go over to London hunting for metal. And then on Wednesday's data, 405, and on Tuesday's data, 750. We did have a fair amount of deliveries in the data for the February contract. Even though there aren't a lot of contracts left over for February, we're seeing here there's a few deliveries here and there. Overall, looking at settlements to look at prices, this is data as of yesterday. Silver was down a whopping 45 cents on trade. That was not a great day for silver. The day before on Friday, it closed up about 18 cents. And Thursday was down about 90 cents. You can just see this column on change right here is where I'm looking. As I change the different days, you can track the price movements. Down 26 cents last Wednesday. And last Tuesday, 7 days ago, down 33 cents. So silver's been trading down a lot. If you go back to volume and OI, with this raised volume on this bar chart, Silver's trading down. You see the correlation there? Almost never does this bar chart have increased volume and the price goes up unless we're in a bull segment of the market. 9 times out of 10, it is shorting by the market to keep silver price down because the market needs cheap silver. Let's move over to London and look at the vault data. We've seen for the first time in a few months a decrease in silver. Overall, 846,457 ounces available in the thousands. Available on the London market. Gold actually trend down a little bit, so more delivery being taken out of London. And I wanted to point that out because we had a big long trend of being taken down, then it stabilized and came back down. And the same thing in silver, it stabilized and came back down. And silver's been moving off quicker than gold. You see the decrease quicker than in gold in the London market. So deliveries are being taken. I've shown you in the last couple of weeks on Twitter and here on YouTube in this video where gold and silver have been taken off the markets, off of COMEX. We're starting to see it in London as well. People are hunting for the real physical. Well, let me show you Shanghai. So this is the data report for January for Shanghai market, right off their webpage, EN, the English version, .sge.com.cn. And I want to scroll right down here and show you something that's very interesting. What we had been seeing in the overall trade of gold is that this number, the overall amount of kilograms, because this is kilograms in that market, metric market, month-on-month change in amount of gold trade is actually up. It had been falling in Shanghai. Even though prices were moving up, the actual amount of deliveries over the last 6 to 7 months have been falling on the Shanghai market in gold, but they're up 15%. Now, if we look at that in pricing terms, because gold price is up, it's 25%. But the actual volume is up 15%. That's important for gold there. And I want to show you overall the delivery numbers in Shanghai. It's a much bigger delivered market than what you have in either London or in the United States. The delivery ratio for gold this past month is 80.5%. 80.5% of contracts on the Shanghai market, it's a physical market. That's the whole purpose of that market. It's there to be physically traded. It's there not to be trading in the paper. And so overall, the cumulative total for the year is 80.5% because it's January's report. On average, last year, we saw about 77%. So we're seeing about 3% more deliveries in China on that gold contract. Now, silver really jumped out. I think that there's a worldwide silver shortage, and I'm seeing the deliveries not only in COMEX, but we're also seeing them here in Shanghai. 29.42% deliveries in January on silver contracts in the Shanghai market. The average last year that I saw was about 17 to 18%. That's up more than 10 percentage points, about 12 percentage points above normal considered for China. There's just a ridiculous amount of delivery going on in China. The physical markets are very strong of both gold and silver in China. People are taking delivery. So we saw it start in the COMEX. And then when I think inventories got a little tight, the EFP started to move over to London to get access to that market. And then I think as London, you start to see that chart trend down in gold and silver, their available inventory, because in London, you've got more contracts than physical. It's a over-the-counter unallocated market, somewhat allocated, but a largely unallocated market if I'm trying to explain it. And it went there, and now it's moving to China. It's like a delayed reaction. You start in the US, then you go to London, then you go to China, and you start taking that metal off the market. There is a rush right now to precious metals. I think what we're seeing going on in the economy and what you're about to see next. And what you're about to see next is very interesting. These are farmer protests, primarily in France, going on that are very, very interesting that I think you guys want to take a look at. So I'm going to show it without the sound because my presentation software is not really good on putting in sound, but just pay attention to what's going on in these videos. I'm going to show you several and how badly it's going. Now, the American media is not really covering this. You have to get it via alternative media, via social media, but look at what's going on. This one's cool. I'm going to start with this one because it's got a narration of the overall story, but there are a lot of other videos here I want you to pay attention to. And look how strongly these farmers are protesting. It says here, the Twitter title, after farmers battled with riot police at an agricultural fair in Paris over the weekend, attended by Macron, the French president claimed it was only a minority who opposed him. But watch the videos. I'm not sure that that's true. Can we get some of that music over my mic?
Ne les félicitez pas de ça. C'est dramatique. Et c'est ridicule de la part d'agriculteurs d'avoir fait de la violence sur un salon qui est le leur. Mais donc, Mettons que vous en aviez 500. Si vous en avez 500 alors que vous avez eu 50 000 visiteurs, on ne peut pas dire que c'est la majorité.
Aujourd'hui, vous êtes bien, demain, vous êtes mort. L'agriculture, c'est comme ça. Pourquoi? Aléa climatique, tout le monde subit une grippe aviaire, des prix qui baissent.
On ne peut pas faire comme si à chaque fois on repartait de zéro. Sinon, c'est pas sérieux. Il faut que tout le monde fasse son boulot. Il faut que ça descende à la fin pour que aussi chacun s'écoute. Donc vous avez des revendications, vous n'avez pas un gouvernement et qui a été complètement sourd. On a été au contact, vous avez des préfectures qui ont fait le boulot. C'est en train de se dénner. Tout ça, ça va aussi prendre du temps.
So essentially, all these trade restrictions and policies basically were putting the farmers out of business, out of work, and they're basically starting to riot. Look at some of the other videos that we have. This is my favorite one. This is a tractor breaking through a police barricade. This is what you get when you get pissed off farmers. And more as we go on to our next video.
C'est une catastrophe, c'est une honte que ce pays n'aide pas son agriculture française. Qu'est-ce qu'on attend? Que les agriculteurs ils crèvent tous les uns après les autres?
There you go. That was at the agricultural fair. This is at the European Quarter in Brussels, where farmers set fire in protest over the policies, not only going on in France, but across Europe. And more, another one with protests in Spain. The farmers are protesting against the EU's farm-to-fork policies that are designed to destroy Europe's agricultural industry, according to Steve 𝘎𝙐𝙇𝙄𝙊𝙍. And we're going to watch the video on his Twitter timeline here. "4,000 protesting farmers are said to have descended on Madrid's city center, according to the video on Sky News. "500 tractors were brought to the protests. And the farmers were blocked from entering the city center. Farmers across the EU are protesting against environmental policies that are increasing their production costs, making it hard for them to make ends meet. And if they can't make ends meet, then they won't produce. If they won't produce, you can expect widespread shortages of food before too long." And lawmaking holding supermarket prices in place while also raising their costs is basically bankrupting. Let's go to another video where a tractor is pulling down a barricade erected by police in Brussels. And for those listening on the podcast, you got a tractor basically just yanking down these little barricades that are not going to stand up to a tractor. All right, there we go. So essentially the big news this week was the farmer protests. I think, or I wonder when we're going to see those here in the United States. Certainly our prices are rising. Certainly a lot of the policies of not only this administration, but past administration towards food and farming and land and those types of things haven't been conducive to lower prices, to more affordability. How long will it be before we have those protests in the United States? I would surmise that it's not going to be that long. I think you're going to see protests coming to a United States city near you, not only for what's going on farming, but also what's going on economically. I don't think we're that far behind Europe, maybe 6 months to a year before we start seeing some of that. Now, I don't know if we'll have people setting fires around government buildings and things like that, like they are, but I wonder how much the American people can take before they reach the same point. And one question I'm going to ask, I'm going to leave it here. Do we think that the European people are more in tune with protesting and sounding their displeasure than the American people? It seems to me like the American people just sort of, seem like they're taking more and taking more. But at what point does it snap for Americans to where they start doing these protests as well? And when does that start? And how does that start? And what does that look like? I think as the economic situation worsens and approaches the pain that we have in Europe, we're not quite there because we have the dollar and because we still have a little bit of pricing power, even though that's waning. People still can't make ends meet in this country. And eventually, the advantages we had with that dollar system are going to fall apart and people are going to protest here. And I wonder where and when and how that starts. Does it start in 2024? That'd be interesting to see. This is your weekly market wrap up from Gold Silver Pros at www.goldsilverpros.com. We do have on sale this week. I'm going to announce it here and on Thursday, 10-ounce, kilo, and 100-ounce Red River bars from the Dorado Mint here in Dallas-Fort Worth area for $2 per ounce over spot. That's right. 10-ounce, 1 kilo, and 100-ounce bars on sale, silver bars on sale from Dorado, the Red River bar design for $2 per ounce over spot. And the way that you get that, I'm about to show you here real quick, is on the website. For those of you that follow in the program, you know pretty well how we've done this in the past. You basically go to discounts up here at the top and you click on the button on discount page which says access discounts here. It'll lead you to a Google form. You simply fill out the form and I'll get back to you. I do have some customers I'm going to get back to today as soon as I get off the broadcast. But if you're interested in any of our exclusive pricing, they're on our website, or the special deal I just announced, silver bars in the 10-ounce, 1 kilo, or 100-ounce variety for per spot $2 over, or per bar $2 over spot per ounce. For each of those bars, go through the website and I'll make sure that we get you those bars out to you. I'm sensing a little bit of frustration with silver, but honestly, silver is so cheap here. I think it's a great buy at this price if you're into silver and that's what you want to do. Of course, do your own research, kind of your financial advisor, do it, do your budget, all that kind of stuff before you do it. But if you're interested in silver, we have that deal for you. Until next time, this is Rob Kientz of GoldSilverPros.com.